data center that was built 10 years ago is very difficult to retrofit to current design standards. They are having to grow more, and the better you can make those data centers flexible and growable, expandable, scalable, that's where they want you to go. All the hyperscalers are looking for flexibility, and what that really means is growth opportunity.
One of the reasons why Deep Knowledge Investing did not sell any of our investments in these companies is because we talked to people like Jeff. We talked to people who are designing the data centers and realized that the need for power in the United States and all over the world is going to continue to grow. The topic we're talking about, which is number 3 in the written version of the 5 things, is tech spending growth on AI infrastructure. Just 2 weeks ago, DeepSeek, the Chinese upstart, came out saying that they had a competitive AI model on just $55 million of spending. That sent the market into a tailspin as everybody worried, oh no, have Apple and Microsoft and Google and Amazon and Meta has spent an absolute fortune on infrastructure that they would no longer need. Nvidia's stock price was down 17% in a day as people realized, oh no, what if nobody needs Nvidia's best chips? Also, there was a huge crash in the independent power producer space as everybody assumed that the world didn't need more energy. That was something we challenged. Now, within a week, actually within days, Deep Knowledge Investing came out and said, we don't believe the DeepSeek numbers. We don't think there are shortcuts, and we don't believe they actually did what they did on $55 million. And Nvidia's kind of second best or third best chips. We got confirmation of that last week as most of the Magnificent Seven reported earnings. And when they did, they talked about increasing their investments in AI and cloud computing, leading that charge from Microsoft, Google, Meta, and Amazon, who are collectively projecting over $215 billion in capital expenditures for 2025. That's a 45% increase from the previous year's spending. So our question to you, if these companies, the best AI companies in the world, are increasing their spending to almost a quarter of a trillion dollars, a 45% increase, do you really believe they think DeepSeek can replicate what they're doing on $55 million of CapEx? The answer is clearly no, but Jeff, you've spent much more time in this space than I have. What are your thoughts?
I don't believe it's actually about trying to replicate it with less energy or less technology. They can't go fast enough. Every signal I've seen and every image I'm getting from anybody is we can't build enough chips, we can't build enough servers, enough racks, enough data centers, enough power to drive all that to keep up with the demand of where AI is going and where it's going to end up in 5 and 10 years from now. So even if the evolutionary development coming out of DeepSeek has made a big leap forward and they can make the chips perform better chips will just perform better than that. And those chips will get applied in the same way, and they'll simply be able to roll out AI services with those chips faster, smarter, more efficient. All that's real. That doesn't mean you aren't going to make the chips better. In fact, today's chips that are being made are going to be maybe not obsolete, but not the newest in a year or in 2 years. So all that stuff is simply growing, and they're just doing it better. And it's look at as an evolution and not a revolution, as Nvidia talks about. Essentially, you can make it like the Model A Ford. When they came out with the Model A Ford, it was maybe 10 times cheaper than all the other cars being made at that time. Not less cars, more cars were generated off of that, and more use of cars. It's the same kind of idea. So yeah, they're still planning to go forward. They're still building as fast as they can. And it's not about the engineering of putting the facility together. It's about the efficiency of the use of the chip in the software putting the AI programs together. So that's the primary difference. A speculation of where some of the difference is potentially taking shortcuts in how they build the model. And if they simplify how they do that, the model uses less energy and it can generate answers easier and faster, but it might not be as accurate of an answer as coming out of the models out of the other AI programs of all the hyperscalers. That's kind of the discussion about where it's going.
So, Jeff, I think that's a really good point. And one of the things that Deep Knowledge Investing put in our version of the five things a week or two ago is exactly what you said. If you're trying to make a funny meme, like we always do funny pictures of Janet Yellen, the former Secretary of the Treasury, DeepSeek's less accurate version is probably fine. If you're just making funny memes, it doesn't matter. But if you're using it to come up with real answers, to do real research, to do programming, anything requiring a level of accuracy, that does matter. And 90% cheaper, but 90% is accurate may not be a good option for people. I think you're making the point that most AI users will want and need the more accurate version because the cost of a mistake is much greater than the cost of using AI. What are your thoughts?
Yeah, absolutely. So far, at least at the beginning, the use of AI, it's kind of a toy. It's a new invention that you can make something fly that doesn't really fly. That's all fun. Now they're trying to make AI do things like select stocks or design homes or design aircraft. When you start getting to significant, complex activities that have tens of thousands of thinking decisions that go into it, billions of decisions and chip activity have to go on to make that come together. You're not going to take shortcuts around that. You're not going to use an easy to build system, even though it's maybe a little less accurate. You can't deal with inaccurate when you get to those levels of thinking.
That's a great point, Jeff. And as somebody who selects stocks for a living, I can tell you that the accuracy is really get the stock right. Don't worry about what it costs you to get there.
That's how they're
Go ahead, Rob.
I actually have a question for Jeff. Jeff, with all that being said, what do you think from both a threat and also an opportunity perspective does this create? So obviously, when you talk about AI and you talk about the scale and the ability to replicate and do that rapidly and more efficiently, right? The layman sees the Skynets and the Terminators and taking over and what threats are those? Then also with that, and Gary, I think this was your point from a few weeks ago, hey, even if we are getting more efficient technology, generally what's going to happen with technology or what does happen with technology is actually more and more of it will be used, which obviously you need to look at from an energy perspective.
I didn't really get the question in there. I'm not going to predict
yeah,
Rob,
so in terms of what you're, yeah, go ahead, Gary.
Rob, I understand the question you're asking. Let me reframe it for Jeff. Jeff, it's a two-part question. One, as the Nvidia chips or other GPUs become faster, more efficient, more capable, do you think that they'll use that extra efficiency to reduce power usage or at as high a power level as they can and perform better? And two, can you talk about the power needs in these AI data centers? Because again, 2 weeks ago, everybody was saying we don't need more energy production. I don't agree with that, but you're the one who's designed these data centers. I'd love your opinion.
Sure. Okay. Sorry for not getting that understanding at the first one. They absolutely are heading toward deliver on the demand for AI services as fast as you can. And we are a very long way short of how people imagine using AI. Therefore, they're going to put every ounce they can into developing the models, improving the abilities to perform. Once they get close to that, and maybe that levels off and isn't such a skyrocket, what they're trying to do, and levels off to a more reasonable demand for it, then they'll move into efficiencies and make it work better. Probably also, while they're doing that, the chips will be getting more efficient as they design them. There's better ways to cool them. And those kind of things are happening concurrently. So that's already happening. It's my understanding that the current chip is actually more energy efficient in use than the older chips. They just demand way more simply because they're delivering that many more calculations.
Yeah.
So it's tenfold calculations, twofold energy, something like that idea. So yes, they're going to continue use every ounce they can into making AI world better, and then efficiency will be the secondary and short on the heels of that.
So I want to emphasize the point that Jeff's making, which is the chips may become more efficient and require more power as a result. And the deep knowledge investing portfolio, we have enormous investments in the energy space, in particular, nuclear energy and uranium and independent power producers that are using nuclear, because those are the best, most reliable, cheapest, carbon-free options to supply power to these data centers. And, Jeff's point is even if these chips become 5 times more efficient, you still can end up in a situation where they need twice as much power. Now, Jeff, I know you were telling me that the kilowatt usage of a rack of servers in the last 5 years has gone from, I think, 3 kilowatts to now over 100, up to 130 right now.
Yeah.
Imagine a few years from now, as these GPUs become 10 times more powerful, even if they need just double the power to get 10x the calculation intensity, all of a sudden we'd be at over 200 kilowatts per rack, and we're going to need a lot more power generation. Am I understanding you correctly, or do you have a different view on it?
No, that's a good summary of it. It literally has gone from 3 to 7 to 14 to 25 to most recently we were designing it at 50, but halfway through the schematic design, they're talking about 70 kilowatts per rack. That makes them heavier, taller, wider, and deeper. So the physical dimensions grow, the power demand grows, the cooling demand grows, and the weight grows. So you have to build a more significant floor. So retrofitting a building now becomes complicated in all those dimensions: physically larger, heavier, and more power and cooling. All of those are real problems, and that's what makes retrofit of a data center that was built 10 years ago is very difficult to retrofit to current design standards. So anyway, the point is, yes, they are having to grow more, and the better you can make those data centers flexible and growable, expandable, scalable, that's where they want you to go. All the hyperscalers are looking for flexibility, and what that really means is growth opportunity.
So to summarize all of this, when the market for power and these AI hyperscalers just blew up a couple of weeks ago, one of the reasons why Deep Knowledge Investing did not sell any of our investments in these companies is because we talked to people like Jeff. We talked to people who are designing the data centers and realized that the need for power in the United States and all over the world is going to continue to grow. We are invested to take advantage of that, and those positions have recovered very quickly. It is being able to talk with people like Jeff that is one of the reasons why, when people were panicking out of losing positions, we hung in there and made money from them. Jeff, thank you so much for joining us. It's always great getting your expertise.